Good morning, Jags. This is Fahad. Today is the last day of the year. It's Thursday, December 31st. Let's get started. Okay, so two things I want to quickly discuss. First, a technical view, then another, and then secondly, a fundamental and technical view on a different stock. But from a sector standpoint, I'm looking at semi-sector, SMH this point. And so what I did last night was I kind of, because it's a light volume environment right now into the holidays, a lot of things are very, very slow at the moment, but there is still action that is perking in some spots that seems to get attention. So across the board, when I looked at all the sectors last night, the one thing that stood out for me was the semi sector is acting rather very, very strongly going into year end, and there's a potential for a breakout here. And so this is the chart. You can see for the past month or so, it has been consolidating in a tight bull flag. And here's a closer look in SMH. It just towards the end of the session, it started to take out this downtrending resistance. And pre-market, it's only up slightly. So there is a little bit of a continuation or a follow through into the sector. So I want to see exactly how this will perform. There's a potential here this thing is going to break out or make new 52-week high. And now the catalyst for this is going to be likely next week at the Consumers Electronics Show, CES, where we're supposed to get a whole bunch of new product announcements in various things. And so that may be the trigger for, in terms of consumer gadgets and all kinds of new applications built on 5G networks. And so we're going to get a lot of that optimism coming out next week. So I want to see exactly how this thing is going to follow through today with a potential breakout and continuation of trend. And then the Consumer Electronics Show next week on January 6th. Now, with that said, let's put this aside. I do want to point out that some of the charts within the semi sector that are looking very good with a similar kind of bull flag formation. For example, here is Micron, MU. This looks fabulous for another breakout. This also has earnings coming out next week as well on January 7th. And then similarly, what's the other one? NVIDIA. NVIDIA has been a sleeping giant for quite some time, for 4 or 5 months, has not done anything. We discussed this in webinar on Tuesday. So I want to see if this thing is going to follow through to the upside today and then possibly next week as well. So these two are names specifically on my watch list for technical breakouts. And overall, the sector looks very good over here. Now, with that said, I have one single stock that I want to discuss, which is Snap-on, SNA. A while back on October 20th, I presented a bull case for this in Jaguar Media. Some of you may remember. We discussed right over here on October 20th. And we presented the bull case. We said that SNA reports earnings on Thursday morning. So that would have been in the middle of or late October. Stock is forming a bull flag, and the debit and credit card spending data checks show a very healthy gain of 16% growth year over year as auto cycle recovers. That was very timely and a perfect bull case presented going into earnings. And subsequently, the company posted earnings right over here 2 days later. The stock had a massive pop because it posted revenues that exceeded expectations by more than 200 basis points. That day, the stock was sharply gapping higher by more than 8%. Came back down on lighter volume, filled the gap, and then went on to make a new 52-week high in the months following. In recent weeks, this stock has come back and is forming a new base. So it has reset the expectations. The MACD and the RSI both have come down and have started to flatline. Here's another closer technical look on this chart. If you look right over here, you can see that this is the major VOP. This is the major VOP. Hold on a second. Let me close this. Right here. This is the major VOP support level at 167.50, came down and built a base, and I think this is a potential setup for a new leg higher from here. That should carry the stock all the way to 182.50. Yesterday, late in the session, I saw somebody bought 400 of these February 175 call options yesterday, which is now reflected in the open interest. This was approximately $250,000 in bullish bet. These contracts were bought for up to $6.90 offer side. So a pretty sizable bet in terms of the fact that this company doesn't usually see a lot of option activity, very low open interest in the entire option chain, and somebody is positioning early for the next earnings cycle, given the stock is pulled back and built a base. Now, with that said, just like last time on October 20th, when I covered the channel checks based on Bank of America debit and credit card usage, we have the same kind of channel checks this time again. They came out a couple days ago. And in this case, they point out that the daily auto parts spending was up approximately 14.9% year over year during the week ending December 12th. This is a step down this time from 17.9% growth in the prior week, and well below the peak level that we saw with a 30% growth year over year in June and July. Nevertheless, this is still very, very positive. I'll show you a specific trend as to what we are seeing in the auto parts spending, and it's right over here. So the COVID had the impact of sharply rising. COVID had the impact of sharply accelerating the total growth rate in the auto parts spending. So we saw from what was a massive decline of 8.4% in March, it shot up to a year-over-year increase to 6.6% in April. Then May and June and July continued to be very, very strong, rising by 24%, 29%, and reaching a peak of 33% in July. But then we saw a decelerating trend from there. The August was 20, September was 22%, October 17, and now November is looking to be about 13%. These are all based on debit and credit card spending data. The important thing is that while on optics, this may look like that this is a decelerating trend. However, November data, even after 3 months of deceleration of 13.2%, is still nearly double than the highest rate that we saw of 6.6% in April, which was the highest growth rate, monthly growth rate in 6 years. Put it differently, these trends in general, when you look at it as, on an average as a whole for the quarter, are the highest growth rates for this for the auto parts sales in 6 years, and Snap-on benefits directly from that. It's right at the center of all of the auto parts makers because of the equipment that it makes. So I think the data may be decelerating in short term, and you're going to see the charts come down. So for example, like this one, slowly, but look at this in comparison to all the prior quarters. These are prior years, I should say. These are very, very strong trends. And I think that if these checks still take about another 6 months or more to come down to a normalized trend of the low single-digit percentage, I think the setup is still there for the company to continue to post blowout quarters on a year-over-year basis. Also, I will mention that for the first quarter of 2021, comps are going to be very, very easy because we have shut down conditions in the country in the first quarter of 2020. So with a hard stop around $165 per share, I think it gradually marches higher and makes a run back to $182 per share. And that's it from me. Jay.
Morning, everyone. So the past couple days, I've been just researching, getting ready for weekend research this Sunday. And I think intentionally I've come across about 10 names, small cap names that we've never covered before, which can be exciting. You know, from a consumer play to an ag and construction play to a few different med tech plays. Now, I don't know all of the companies that I'll be bringing this weekend, but one of them that I will be talking about is a med tech company, which, you know, I'm going to have to label as speculative, as a contrarian bullish call. And that company is called XGN. Ticker is XGN. Daily chart is all over the place. If you look at the weekly chart, you could say that there is support around $10, $11, but there was a huge drop at the beginning of 2020 in Q1, and I'll explain what happened there. But XGN, they develop and commercialize various testing products to help rheumatologists diagnose and monitor complex autoimmune diseases. So these would include lupus and rheumatoid arthritis. BTIG sizes their total addressable market at $5 billion in the US alone, and they also estimate that its share is right now at less than 1%. About 70% of rheumatologists have not yet ordered from XGN, and only 10% have ordered 10 or more tests in a given quarter. Now, some catalysts to possibly build the stock higher would be coverage announcements. Right now, the company is currently in network for approximately 54 million covered lives, but analysts expect that number to march toward 200 million over the next couple of years. So as a result, there is anticipation that they could win a number of significant, payer wins essentially. BTIG says that a major health plan win could move the stock, though they are not modeling that in their current forecast. Now, gross margins right now, they're hovering in the mid 50% range. With the contributions from pharmaceutical partners, which are 100% accretive to gross margins, those should take that number to about 70% over the long run. And speaking of pharmaceutical partnerships, they have collaborations with GlaxoSmithKline, they have collaborations with Horizon Therapeutics, but the big one is with Jansen Biotech. They collaborated with them in December of 2018 to co-promote a drug called Simponi for the treatment of rheumatoid arthritis. On the Q1 earnings call, XGN reported zero revenue from this co-promotion. And apparently there was some confusion in the syndicated data that Jansen used to measure results, and it wasn't discovered until after the quarter had ended. So this is why you saw that huge drop in Q1 of this year. The Q2 call rolls around. XGN, they did report much better revenue results. They also extended their deal with Jansen, and they negotiated different terms for their contract. So I'll definitely be talking a lot about Simponi and that collaboration. And then the final point I would make is that back in early June, the company announced a license agreement with the Ohio State Innovation Foundation to develop a diagnostic test for fibromyalgia. In the very early innings right now, but this could be another potential catalyst down the road. So look out for this write-up in Weekend Research.
Why would you? That's a very interesting one. Out of the box view, not on the radar. Stock is just not gone anywhere for quite some time, so it's sitting here. This would not be in anyone's in any momentum trader's radar at all by any means until it rips higher from here by 50%, and then everybody on Twitter will be tweeting about this. In terms of the weekend research that you're putting together, what would be the single most important catalyst, let's say, in the next 3 months?
I think number one would be the collaboration with Jansen Biotech. You don't want to see a repeat of what happened a year ago. You don't want to see any sort of hiccups in their agreements where one side is unhappy with another. So I think that is worth monitoring the most right now.
Okay. I see I'm reading the press release over here about this amended co-promotion agreement. This was actually signed only 2 days ago on December 28th. The company also did a successful $150 million secondary share offering, which is why the stock acted this much weak. This was on November 16th, so that's now behind us as well. They should not be doing any more capital raise. And lastly, reading this from Ron Roca, the president and the CEO of the company, making a comment on November 10th saying that despite the COVID-19 headwinds, our testing volumes have approached the level of the first quarter of 2020 volumes, which were only marginally affected by COVID-19. Meanwhile, our promotion agreement with Jansen continues to supplement our top line and enhance the gross margins, which speaks to the point that you just made. In other words, if they're already reaching their pre-COVID levels in terms of volumes and Jansen agreement has yet to kick in materially, then that's the setup there, right there, for a potential upside scenario versus the consensus based on these comments. Excellent stuff. Looking forward to your write-up this weekend.
All right.
Jay, oh, sorry, Chronicle, I need more coffee.
Good morning. So I've been getting emails lately about asking about XPEL, symbol XPEL.
Yeah.
Basically, the common question is whether or not to take profits, and chances are there are others who are also wondering the same. So I just thought I'd address those questions right now. So first off, when I presented this investing idea, I did not anticipate the stock would reach $50 territory this fast.
Hold on a
Yeah.
second. Chronicle, do you ever anticipate any stock to go up 100%
No.
after you present an idea? Because they all seem to do just that. Honestly, Saint Joe, this was presented in the investing series in a real estate company. This is not a SaaS, and this is what the stock did. And then Pinduoduo, take a look at this stock, and then Billy. BILI. Take a look at this stock. 50 to 94, like out of nowhere. And then there have been so many others, and Ergo was the other one. But fantastic idea here, no question about this. So, folks, October 9th was the date right over here when Chronicle presented this bull case. And this was with the stock trading. October 9th would be here around $27 per share, now at 53. So your update here is what for clients?
First off, I want to stress that this was always meant to be a long-term investing idea. So and back when the stock was trading in low to mid 20s, it was severely underpriced. Now, going forward, I'm anticipating roughly $220 million in sales for 2021, which is a monumental acceleration versus 2020. Partly because of easy year-over-year comparisons, but also because I think the supply chain issues with the H2 order delays in China in order to fulfill orders elsewhere, those issues are temporary and have nothing to do with demand growth. And then separately, I like how they're tackling Europe with regards to their expansion strategy of taking what they've learned in France. And then for 2022, I've since tempered my expectations a bit compared to what I had in the original write-up. Like, I'm now anticipating high teens year-over-year sales growth for 2 years down the road. Secondly, the other important things are gross and EBIT margins. If we look at commentary and presentation slides from previous quarters, we will see that management is in the midst of a long-term plan to improve gross margin by several percentage points for a couple more years. Personally, I've conservatively penciled in 200 basis points of gross margin improvement, most of which I anticipate will come from China. And then the third important thing is we have to keep in mind that there's a lot of runway to go in terms of both per car application as well as expansions into other non-automobile end markets. So looking at the whole picture, we are basically looking at a net cash teen percentage growth company over the next decade with a management that's proven capable of making cheap and effective acquisitions with free cash in both domestic and international markets. And on top of all that, I would also add that I think the strongest bull case here is the business model itself, which includes the marketing strategy and management team. Like, I'm going to say the same thing I said in my email replies, which is that I'm convinced that we could ask this management to sell almost anything through their model, and they will probably sell it successfully. And even though it's difficult to assign a value to this, I think at some point the stock will have to reflect some of that. So that would be my entire answer to those emails regarding XPEL. Now, in terms of where I think the stock can go next year, so if you notice in the original write-up, when I arrived at my $62 target by 2023, I did so using extremely conservative assumptions, which did not factor in things like margin growth, accelerated growth in Asia, and also management competency. But if I remove these conservative assumptions, and if I use price to earnings instead of price to sales, that's going to get me to between $70+ to $80 in 2021. And that's assuming no black swans like the one we had this year. So about $75 would be my new realistic 1-year target. Now that doesn't mean it's going to get there in a straight line like the last couple months. I think statistically speaking, the ratio is something like stocks spending about 80 to 90% of the time consolidating and only a vast minority actually making big moves. So I wouldn't be surprised at all if XPEL stocks begins to stall and consolidate for a bit before taking the next leg higher. And then someone also asked why the stock keeps going up so fast. I think one of the reasons why is because the stock has a very low float, and at the same time, almost everybody's holding on to their shares. So that's likely contributed to the squeeze. And then finally, to answer the overarching question about whether or not to take profits. Personally, I'm not exiting this position because there's plenty of room for upside here. But if it's keeping you up at night, or if it's starting to hit your gross exposure limits, then I suppose there's no harm in taking some of it partially off the table and then looking to buy it back on any future dips. But the bottom line is I would not hand over the entire position right now.
So a couple thoughts that I will have for you on this one. So first of all, I'm sure you saw this news that back on September 28th, company acquired France Auto Racing assets. I don't know how significant this is, but it was for undisclosed terms. Any quick thoughts on that?
Personally, I'm more excited about their recent expansion into marine products and marine coating.
All right. That might be something that we're going to hear more if it is any significant revenue driver in the next earnings report. That's the first quick thought. Second thought is that I think I heard you mention that the annual revenue base will reach $200 million potentially next year in 2021. If that's the case, then the trailing 12-month revenues for this company is around 149 million. So 200 million puts us at about 33% growth rate year over year. And I know that you are still conservatively estimating high teens growth rate on the revenue side year over year, but maybe there's still elements of surprise over there if we're talking about reaching $200 million next year. And then the last thing that I will mention is typically when I have a position that has done so well and has gone up like the way this one has, doubling in such a short amount of time, what do I do in these cases? So for me, if I believe that the stock is quite overbought in the short term for a couple of months or so, probably going to see some loss of momentum, maybe consolidate and whatnot. I simply, for against half of my position, so if I have 1,000 shares, right, against half of my positions or 500 shares, I would go out to, in this case, for example, to February month, and I would sell 5 contracts of the February 60 covered calls. They are very juicy right now with 50 days to expiration. The stock is at 53, and I could sell them for about $3.30 credit. So that's the covered call February 60. And then I would also sell naked puts. For example, in this case, would be February 45 naked puts. So basically sell the straddle, February 45, 60 straddle against it. That can be done easily for about $5 net credit against half of the position, just to peel some profits. If it comes in well below 45, then those puts get assigned, and I basically end up buying that half a position, and then if it gets blown out through 60, then basically I still make money all the way to the upside while keeping the $5 credit. So you can sell straddles, out of money straddles against the stock, and then basically peel some profits along that way if you believe that this thing in the short term is going to consolidate and such. All right, folks, we're going to stop over here. Thank you very much for joining. Happy holidays to all. And for conversations, we will see you next week, New Year, on January, whatever that date is. And meanwhile, we'll see you in the chat room shortly.